China has been very, very active in the marketplace in wanting to exert some influence on the dollar hegemony, but also have now actually taken action by purchasing gold directly in the marketplace.
The big news this week is that the U.S. Treasury's gold reserve has reached $1 trillion valuation. That sounds massive, but Jeff Park points out a hidden truth. While gold's price has surged past $3,000 to $850 an ounce, America's actual share of global gold reserves has fallen to a 90-year low. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
Gold's definitely been the story of the year. And I think at some level, there's a common parallel with Bitcoin, but there's also a distinct tone that's quite remarkable to gold itself. And I think to understand that, we have to return to some geopolitical, some history, and recognize that at the end of the day, these are driven by market participants and buyers and sellers, and ultimately flows that take dominance over what I might even argue as just facts that we can observe technically speaking. So big news this week that the U.S. Treasury's Bitcoin reserve, gold reserve has actually hit $1 trillion. That's a big number, and that's because gold is now at 38.50. At the other side of this is the fact that the U.S. reserve of gold is actually at a 90-year low. This they did not report in the mainstream media, and here I think lies the dilemma. Gold is going higher, but the US share of its gold reserve at a global level has decreased to a pretty low level. And this is the tension. And I think people like to talk about the price of gold, but the other dimension we need to consider is the relative level of gold's ownership across the geopolitical arena beyond just the absolute price itself. So I think this is partially why we're seeing such dominating flow with gold narratives, because there's active geopolitical participants, namely China. China has been very, very active in the marketplace in wanting to exert some influence on the dollar hegemony, but also have now actually taken action by purchasing gold directly in the marketplace. So I think there's a lot of moving parts here, but ultimately the salient facts are that at one point in time, post-World War II, the US had over 50% of the world's global gold reserve supply as a central bank, and now it's less than 20%. So who's making up for the compensation on their side? Likely China and many other BRIC countries in the lead. And I think that sets the backdrop for the conversation in gold that is, at this point in time, different than Bitcoin's adoption story to come on the institutional front. I completely agree. I think gold's greatest cultural power is its permanent fixture in our mindset and its durability for eons of human civilization. And it's universal too. I think both of those components make it totally timeless. When I got married, a bunch of my relatives in Korea gifted me gold. And I remember even then thinking, man, what a thing to just keep in my closet now in a vault. And like, I don't want to deal with it. It's kind of annoying. And then when I had kids, it's very traditional in Asian countries to also gift your child gold related jewelry. So here's now my son who's 1 year old, and he has this giant thick gold bracelet and rings. I think we got like 7 different rings and
a jumpsuit as well. Like the whole thing.
I mean, soon the teeth are coming, I'm sure. And so like we have this pile of gold and it's in our closet right now. And the funniest thing is that has outperformed almost any gifts that I've ever got since my kid was born. I would say actually the greatest loss was maybe on the diamond that I got from my wife in the proposal, for which scarcity apparently is not as strong for diamonds as we all thought. I think it will catch up. I think, as I've mentioned before, and as you would agree, all of these are ultimately driven by flows. We need buyers in the marketplace. And I think it's inevitable that there will be more buyers at the institutional level for Bitcoin adoption, but we have to move that agenda with a little bit more focused deliberation. I do think that's why when we talk about gold in the context of Bitcoin, the first prong that we all attach to is whether the strategic reserve can be allocated to actually buy Bitcoin for the US, in which we are sitting on a bunch of paper gains with gold in particular, right? Because gold has been marked at the Treasury at $42 an ounce. And we all know right now it's trading at $38.50. That's 100x, right? That's 100x that we're sitting on. And if you do the math, that's a
Great investment.
hugely profitable investment and reflexive in some nature as well as to what the US was able to accomplish with on the back of the dollar. But there's $1 trillion of basically paper gains, right? And $1 trillion actually, it sounds big to us, but it's probably not that big in the grand scheme of how indebted the country itself is, right? $33 trillion of US debt out there. So $1 trillion, maybe it's actually not that big of a reval event anymore. So this is kind of, I think, the tension as to do we do it, do we not do it? If we do it, doesn't move the dial that much. But the thing that is really interesting then is, hey, what if we then actually do find a way to find liquidity, a funding-based liquidity on the $1 trillion of gold and buy Bitcoin? And $1 trillion of Bitcoin is actually hugely impactful for the Bitcoin market. And so if there's a way to unlock the ability to build leverage on the paper gains of gold to take a call option on Bitcoin, there's something incredible here that could happen. And the math is pretty simple. If you own Bitcoin and you assume that it's going to go up by 12% a year, you'll make a 30x in 30 years, right? I mean, it's actually going to be able to cover most of the fiscal deficit hole that exists. And if you think it's actually going to go up by 40% per year, which is what the CAGR has been otherwise annualizing, it's 10 years. So the idea of having a gold revaluation event that's Bitcoin aligned, I think is really the most interesting political and economic story that reimagines the opportunity set to be so much bigger than what even MicroStrategy is doing with its own.
And here's the ironic part. Those gold gifts in his closet have outperformed nearly every other present he's ever received. Meanwhile, diamonds, once thought scarce, have lost much of their value because scarcity wasn't as real as the industry suggested.
I think the executive path is a great starting point to create a watershed moment, but the optimistic person in me believes that no democratic coalition is truly bought in until a legislative motion, because I believe that US citizens are ultimately the shareholders of US government as a construct of what a corporation could in itself be. And so doing it legislatively is the ultimate path for broad-based adoption that's ultimately irreversible. The problem with the strategic initiative is that they can be unwound by the next person if they find it to be politically challenging, whereas a legislative approach is a permanent output. And actually, I think that's what we all should aspire for. It's part of the Bitcoin movement. It's why you and I and everyone does the work of trying to make people understand Bitcoin better, not just as a way to store wealth, but the social mission behind it. Because one of the reasons gold, I think, has won so far is because that narrative has been unchallenged by almost a global level. Gold is the store of wealth, and it especially is a store of wealth for sovereigns. And I think if we're able to kind of channel that conversation to it being the same for Bitcoin, then it's really only a matter of time. And going back to kind of my example of having all this gold in my closet, in my vault, I don't like it. I think there's a lot of risk with it. And I'd rather own something else kind of in a way that I can hold to myself in a sovereign way, a line of code I can memorize. That will give me a lot more peace. Comes with risks, of course. Some older people like physically touching stuff. I don't need to think about physically touching stuff. So for me, it works. And you know what? Young people are mentally more able to do things that older people can't. And so the trend of young people understanding digital store of wealth, to me, is the big picture here about the trade-off between paper Bitcoin and physical Bitcoin. And it's the same in gold world too. I mean, there's benefits to trading gold futures and gold ETFs because liquidity is at ease and you can monetize your gains pretty efficiently. I mean, those physical bars you get from Costco, there's costs associated with that, not just from storing, but also imagine actually having to remelt it into something else if you wanted to find a way to find scale and the ultimate output into something productive like jewelry, for example. And there's always a bid offer that comes with intermediation in that dealer market too. So, I think part of the arbitrage here, if I had to make a choice of buying a Costco gold bar or something gold adjacent else, is actually gold jewelry, right? Because here you get the sense of gold in itself being the anchor to a store of value. But also, I mean, I think women just know this better than men. Like there are social capital associated with certain things and gold-backed luxury goods like watches and other fine pieces are just as valuable. I think it's actually the incredible opportunity of Bitcoin and its greatest fallibility, which is that when I was pitching Bitcoin to investors at Bitwise, easy parallel you would draw is Bitcoin being called digital gold. But I think all those who know crypto well enough know there's an asterisk behind that, which is gold, to your point, is physically immutable, but Bitcoin actually is a living, breathing code that actually does require stewardship and maintenance, which is why there's developers and nonprofits that actually take part. They have to run the clients. It's supported by miners. There's different mining pools, and there's actually kind of an economic activity behind the endeavor of the final output that is a Bitcoin block. And so, I also thought one of the reasons maybe Bitcoin may not be accelerating as much as gold, I don't think this is actually the case, is that there is so much internal drama right now within the Bitcoin community about very small things that has captured the imagination for some of these technological / existential philosophical risk questions. So in some sense, maybe it's a little bit of a disservice to our own community that we do it so openly in a way that is all about public information sharing towards a community-owned project. But at the same time, if I were outside and I was a BlackRock ETF buyer and I listened to the conversation that's happening between the Bitcoin developers, I might say, hold on a second. This is crazy stuff I don't understand at all. What is a spam filter? I don't understand what a relay policy is. And this doesn't sound anything like I can hold in my hand. And then it's very dissuasive, actually. And so the line we have to walk is being thoughtful about why this is actually an important conversation. And it's a conversation that helps us future-proof Bitcoin as the ultimate store of value, which requires work and education. And it's time to kind of level up, but at the same time, do it in a way that's cohesive and one that shows a unified front across the Bitcoin community. And that's always been the fun part of the social mission of Bitcoin. There's always cycles of investors and developers coming for different missions as to what Bitcoin represents in the moment of decentralization. Investors generally today are not underwriting these risks, which is why I don't think it's affecting current sentiment from a flows perspective. But there are times you wonder if it's hitting an inflection point that could, right? So for example, I think last week there was a conversation that Luke Dashier would actually hard fork Bitcoin and enforce spam filters in ways that the Bitcoin community is not going to in their V30 rollout. And so when you hear the word hard fork, that has implications. Anyone who's lived through it knows that requires a ton of management. And if you're an ETF issuer, for example, there's actually rooms for divergent outcomes too, depending on which path you might choose and which custodian you actually are using. And so when you go down that path deep enough, it does then become like, hold on, is this actually a good time when this political unfolding is affecting the community? And so I think there's always like a moment where the line can't be totally crossed. And I think we got kind of near there, which is why I think we found more original Bitcoin developers coming in and participating in the conversation, to your point, to minimize this particular topic of op return, because at the end of the day, it doesn't, I don't think, affect the big course of Bitcoin adoption's history, but it does have that kind of smell and inkling of what the block size war was ultimately about, which is the uncomfortable truth about who owns Bitcoin, right? Ultimately, who is running consensus at Bitcoin? And what the block size war ultimately showed was that the node clients are very valuable and they are in control versus miners and their self-interests. And that was a huge moment because it showed you decentralization was alive. Sometimes you can take that to a more extreme level about what exactly that quote unquote decentralization is. And this is one version of that, where those who are pro or anti filters are coming at that lens of what is good for a sovereign node operator versus, a bigger operator for which these technical trade-offs are being made.
The block size wars proved that decentralization is real. Node operators ultimately held power over miners. These messy debates ensure Bitcoin remains future-proof, even if they scare off casual observers in the short term.